Let's get across the market open now. James Garish joining us on Market Matters. James, happy Wednesday to you. Let's start stateside and some, encouraging news, I guess, for investors and more broadly what we're seeing in terms of that read on inflation, which was considerably softer than expected. So that's obviously dampening expectations the Fed is going to need to hike.
Yeah, good morning to you, Andrew. It was there was a barrage of news flow out last night. Obviously, bank reporting started in the US. Trump walked back from his 20% surcharge for foreign ships moving through the strait, and you made mention of the inflation data. So that was really key. So the market's fixated on the trajectory of inflation, particularly over in the US, and obviously domestically, it's really important as well. So a more benign inflation print for the last month, it was down 0.4. The market was expecting down 0.1 month on month, and the annual numbers came in better than expected. So core CPI was sitting 2.5% over in the US market. So that's obviously better than the market had feared. That saw bond yields move lower, as you'd expect. So there was a big move in the US two-year yields, the front end of the US yield curve. That was down nearly 9 basis points overnight. US 10-year yield was also lower. So we then had that tempered somewhat by Kevin Warsh coming out and saying that the central bank doesn't think the job on inflation is done, and they're still very focused on the inflation picture moving forward. So some mixed signals over there, but ultimately the CPI data out overnight was better than expected, and that's a positive from a market's point of view.
Now, James, you mentioned the banks obviously kicking off earnings season as they do, and pretty impressive, you got to say, in fact, records tumbling. Interesting, Jamie Dimon, JP Morgan, saying this pretty much as good as it gets.
Yeah, well, it could well be. I mean, their trading related revenue, so particularly on the equity side, was phenomenal in the quarter. So Goldman Sachs is probably the top of the bunch that reported last night. Their shares rallied 9%. They absolutely smashed on the equity trading revenue for the quarter. They printed over $7 billion in equity trading revenue for the quarter. The other banks were strong as well. So Citi, Bank of America, JP Morgan, all out with really strong numbers, predicated on, I guess, their strength in US markets, a fair amount of corporate activity, but also really strong equity performance from their trading desks over there. So the only one that probably slightly underwhelmed last night was Citi. They had some positive components of their result, but there were a few underlying bits of weakness as well. So they fell 5%, but the other banks were really strong on the session. And it does set up well for the backdrop of US earnings season, second quarter earnings season, which kicks off with the banks and then broadens throughout the month. So we're sitting here thinking consensus is pricing second quarter EPS to be 24% higher. So the bar is set high. But at least for now, the banks have certainly delivered on those elevated expectations, Andrew.
Yeah, James, they've certainly done well out of M&A too, haven't they? And in particular, that SpaceX IPO.
A fee frenzy was SpaceX. So obviously they had a big number of banks on the ticket. It was a huge raise, biggest in history. So obviously the fees are going to be the biggest in history. So that's not surprising that they've earned well out of it. They've also, it obviously speaks into how they cover the stock as well. So obviously all banks are now coming out of research restrictions on that, and they're going to have a very positive view on SpaceX stocks, which I'd note has come back a fair way from their peak post IPO. So the stock obviously rallied up through $200 a share post IPO, and it's now back nearer the IPO price.
Elsewhere, James, healthcare suffering overnight. Look, I mean, it's been a long-term sufferer, of course, over the past 12 months or so. Many have seen opportunity there. I know you do. What have you just seen?
Yeah, it was interesting last night. So you rightly flagged that healthcare has been soft, and there's a lot of rhetoric notes coming out from fundies saying healthcare is the place to be. It's now on really depressed valuations, and for the level of growth and the structural growth with an aging population, healthcare is really the place to be at the moment. So last night it wasn't. Over in the US at least. So the healthcare sector was down nearly 2% last night. It all came on the back of HCA Healthcare. So this is the largest private hospital operator over in the US. They gave some preliminary second quarter numbers that were all good for the second quarter, but they cut full year guidance. So they've got some softness in some components of their business, which has forced them to downgrade their guidance. The stock was down 7% overnight, but weakness through they're the funnel, right? So the funnel going through the private hospital space implies that there's going to be weakness across all the peripheral healthcare services. So there was a number of healthcare stocks that got hit last night over in the US. So just looking at, ResMed, I think, was down a couple of percent over in the US market, so it should be weaker this morning. So healthcare is still bobbing along the bottom. HCA is actually a stock that we bought recently. We bought it about $390 a share. It's trading overnight in the 360s. So it had fallen 30% already before this softer guidance last night. So there is a fair amount of pain already playing through the healthcare space. So I wouldn't have thought that downgrade from HCA was that concerning, that surprising. It wasn't from our point of view. So some of these, when you're trying to pick bottoms in sectors and stocks, there's going to be a few that go a little bit lower. So HCA Healthcare and the broader healthcare weakness, I think it's going to continue to bob along the bottom for a little while yet, Andrew.
Now, James, more locally, we are in the midst of production updates from the resource companies at the moment. More today as well, specifically from Rio Tinto and Evolution. What are you noticing with the numbers in general?
Yeah, I've only just cast my eye over the Evolution one very briefly. So Evolution looks like their quarterly numbers are solid. Haven't seen the Rio numbers. You think about what's playing out in the resources space. We've got some very mixed dynamics there. So gold has been incredibly weak. Copper prices have pulled back, and copper stocks have pulled back. Iron ore dipped below. It's been trading below $100 a ton for a while now, but yesterday it rallied back up through $100 a ton. So my view around the resources is this is a pullback in a broader bull trend. I think the dynamics in many of the resources, the areas of the resources sector, remain supportive. So copper, I think the dynamics in gold remain supportive. Uranium has had a reasonable pullback, particularly in uranium stocks here locally. So my view is that the current weakness is definitely a buying opportunity in this structural dynamic of stronger for longer commodity prices in most areas, Andrew.